Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, and today we're looking at a company that has apparently gotten a whole lot of units in play. If you catch my drift, get ready for a deep dive into Xsolla SPAC 1's latest report. This filing details some pretty significant financial moves, especially around their recent public offering and those extra units that came in. We're going to break down what this all means for investors and what story these numbers are really telling us. Oh, and by the way, if you like getting these kinds of straightforward explanations from official documents, make sure you hit that subscribe button. And don't forget to join our Discord community, linked in the description below, for more discussions. So, Xsolla SPAC 1, or as they're known on the stock market, XSLU, XSL and XSLW, has been busy. This report kicks off by listing the securities they have registered. It tells us that they have units, which are basically a bundle of one Class A ordinary share and half of a redeemable warrant. These are traded on the Nasdaq Stock Market LLC. They also have just the Class A ordinary shares and then the warrants separately. It is like they're selling the whole package and then breaking it down into its parts too. This document is a Form 8, which is like an urgent report filed with the Securities and Exchange Commission. It is used for significant events that the company wants to announce quickly. And in this case, it is all about the aftermath of their initial public offering, or IPO, and some subsequent share sales. Let's get into the nitty-gritty of their recent transactions. Xsolla SPAC 1 had its IPO on the 30th of January of 2026. They sold 20 million units, and each unit had one Class A ordinary share and half a redeemable warrant. They priced these units at $10 each, which brought in a cool $200 million before any expenses. Think of it like this: each unit was a small package with a share and a future option to buy more shares at a set price. Alongside the IPO, they also did a private placement. This is where they sold 400,000 units directly to Xsolla SPAC I LLC at the same $10 per unit price, bringing in an extra $4 million. This is pretty common in IPOs where early investors or related parties get in on the deal before or at the same time as the public. Now, it gets even more interesting. The underwriters, the folks who helped sell the shares, had an option to buy more shares if demand was high. This is called an over-allotment option. Xsolla SPAC 1 ended up selling an additional 419,385 units through this option. This happened on the 2nd of February 2026, and that brought in another $4.19 million. And guess what? Right alongside that, they did another small private sale of 3146 units to the sponsor, raking in another $31,460. What is really important here is what happened with all that new money. On the 2nd of February of 2026, the additional $4.19 million from those allotment units and the extra private units went straight into the company's trust account. This trust account is like a holding place for the money raised from the IPO, meant to protect public shareholders after all these transactions. The total amount held in that trust account reached $204,193,850. This shows they are actively managing the funds raised from their public debut and subsequent activities. To give you a clearer picture of what all this means financially, the company has included a pro forma balance sheet as an exhibit. Think of a pro forma statement as a what-if financial picture. In this case, it shows how the company's financial position looks after accounting for the proceeds from those over-allotment option units. It's their way of saying, here is how things stand right after these recent sales. And finally, to wrap things up, the report is signed by Dmitry Bukovsky, who is the Chief Executive Officer of Xsolla SPAC 1. This signifies that the company is officially confirming the information in this report. Now, looking at these numbers more broadly, Xsolla SPAC 1 is in the early stages of its life as a public company. They raised a significant amount of money through their IPO and subsequent share issuances. The key for any SPAC or special purpose acquisition company like Xsolla SPAC 1 is to use this capital effectively to find and merge with another operating business. The money in the trust account is essentially their war chest for that acquisition. The fact that they've successfully completed their IPO and are actively placing funds into the trust account shows they are moving forward with their stated objectives. However, the success of the company will ultimately depend on the quality of the business they choose to merge with. There is always a risk that they might not find a suitable target, or that the merger itself might not be beneficial in the long run. For now, though, they've successfully capitalized themselves and are in a position to pursue their growth strategy. Alright, that is our breakdown of Xsolla SPAC 1's latest filing. What are your thoughts on how these SPACs operate and the role of their IPO proceeds? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.